And if the Fed's going to try and maintain stability at the long end of the curve and not let rates go up too much, it's going to have to buy a lot of that treasury issuance. And the only way to do that is to print more money.
Well, hello, my friends. It's Yara coming to you from Arcadia, and I am very blessed and grateful to be joined by Dave Kranzler with a special message for all of you to help me break down what's been going on with the whole pre-Jackson Hole kind of noise, and maybe ask you, Dave, what do you think is going to happen with Jackson Hole? But first, I'd just like to say welcome and thank you for joining me. How are you today?
Oh, my pleasure. Good to see you.
Thank you.
Doing okay. Got in my tennis already, so puts me in a better mood.
So you don't just wear that shirt for everyday shopping?
This is my after tennis shirt.
Nice. Cool. Asserting your dominance. I like it. So Dave, there's been so many headlines, somewhat conflicting, somewhat kind of wild, about what people think is going to happen at Jackson Hole, even coming from other members of the Fed. So I was hoping you could tell me what you think is going to happen and what Powell's going to say, and how that might play out.
Well, that's a good question. I think this is just my opinion. I think Powell's going to give a speech and the markets may or may not react, and then we start the weekend.
I like it, short and sweet.
I mean, I read, I don't remember who wrote it, but I read a brief analysis a couple days ago, and it basically said that, and I agree with it. It basically said that Powell is going to be very careful to not box himself into any kind of definitive timeline for a taper event that may start or may not start. I mean, it's just silly that these grown, educated men behave like this, or at least they expect us to listen to their bullshit and go, oh yeah, okay. I think it's funny that they're trying to decide when to have conversations about when to have a conversation about starting the taper, right?
Yeah.
And now you've got, I guess Goldman Sachs came out today and said it expects a taper to start in October, and I think the number that's being thrown out is 15 billion. So great. So they go from 120 billion a month to 105 billion a month. Big deal. And today we saw the Fed does they've always done this. Well, at least as long as I've been observing the Fed, they have a good cop, bad cop routine. And in this particular era of the Fed, Bullard and Kaplan play the bad cop. Okay. And you got other guys on the and some are voting, some are non-voting, and that makes a difference. I mean, it's easy for the non-voting Fed FOMC members to play bad cop because their threats and their venting, it's irrelevant. So Bullard, and I can't remember if Bullard's voting or not. I don't think Kaplan is. It doesn't really matter. That Bullard was out today saying, we got to start the taper soon, and we can, if we start it now, we can end, and I forget what the date was, I think October 2022 or something.
I think that's what I have the article.
Yeah. So, I mean, so you got the bad cop routine today. The market got hit. Most of this probably had to do with, the explosion in Kabul in Afghanistan. But, the market got hit, and it's like gold actually popped quite a bit when that explosion occurred. And the mining stocks were green. Well, the mining stocks finished red. So it tells me that the bad cop routine that Bullard played today had a greater influence on the stock market behavior than the explosion at the Kabul airport or whatever. I haven't seen all the details, but so to me, it kind of feels like Powell's going to come out and I mean, who knows what's going to come out of his mouth? We all saw that riff on inflation that he had. I mean,
It was
I
word
I almost
salad.
fell off my chair.
It was
And
hard to decipher at best.
it was hard to watch because
Yeah.
it was just so moronic and so unintelligible,
Yeah.
and so incoherent. But I think he's going to try and see. Here's the thing, that the Fed it has a balancing act. It has to be careful to maintain Fed funds rates above zero, and that's a big part of what the reverse repos are all about: maintaining the Fed funds rate above zero so it doesn't go negative. And it also has to keep rates. I mean, it manages rates at the, they talk about yield curve control. They've been doing yield curve control all along. I mean, you've got a 1.34% 10-year yield, and that's totally not the natural market setting that price. The Fed has purchased 57% of all new treasuries issued since last March 2020. So it's an artificial market. But if the Fed doesn't try to keep rates contained at the longer end, and that's a harder task to do than to keep rates pinned at zero on the short end, because that's everything keys off the Fed funds rate. So if rates, like if the 10-year goes over 2% and stays there, you're going to have a collapse in the housing market. So the Fed is, and the other thing the Fed has to do is try and keep the dollar supported. So, and that's a big part of what this taper propaganda is all about, because I mean, anyone who can do simple arithmetic can look at the ballooning federal deficit. It's going to be well over $2 trillion for the fiscal year through that ends at the end of September, the end of next month. Well over $2 trillion. The Fed's going to have to, I mean, the Treasury is going to have to start just unloading an avalanche of new issuance onto the market. And if the Fed doesn't buy a fair percentage of that, then the rates on the long end are going to go up a lot. And, that's sort of the so-called bond vigilante effect that you hear about. Okay. So I think what Powell is going to do is well, and maintaining stability at the longer end of the curve requires maintaining stability in the dollar. So if the Fed has to reverse course for some reason, the economy starts tanking, which it is tanking now, starting to tank now in a major way. And you're seeing it in a lot of different economic numbers, especially the private sector economic numbers. Okay. And if the Fed's going to try and maintain stability at the long end of the curve and not let rates go up too much, it's going to have to buy a lot of that Treasury issuance. And the only way to do that is to print more money. And I don't know, maybe it's possible. I've been thinking about this a little deeper lately. It's possible that, I mean, they're doing, $1 trillion a day now in reverse repos. So that's cash that the Fed takes in from the banks, and the Fed gives them some type of collateral, treasuries or mortgages. And I guess if the Fed were to start tapering and the Treasury starts issuing a lot of new bonds, I suppose the money that's being reverse repoed right now could possibly use to fund new Treasury issuance. So in that sense, the Fed might be able to get away with a taper, a small taper, and still get the new Treasury issuance financed by the money that's being held in suspended animation through the reverse repo process. And again, I'm just sort of speculating here. I don't know. And I also think, whether or not the Fed actually starts to taper, and it could, who knows? I don't think it will, but it could. No one knows. The Fed, I don't even know if the Fed knows right now. I think they're going to let the stock market dictate, how quickly they taper and how much they taper and how long they keep on tapering, right? So last time around, they tried to taper, and they actually tried to remove liquidity from the banking system, and we had a massive, I think we had a 10% stock market drawdown in 2018. It was 10% plus or minus on the S&P. I don't remember how much the NASDAQ was down. So I think Powell's going to kind of give a boring speech that's he's walking the razor's edge, and it's a balancing act between trying to sound somewhat hawkish to keep the dollar supported, and trying not to sound so hawkish that he causes a big sell-off in the stock market, because the stock market is so tightly wound with algorithmic program trades and stop losses and gamma squeezes that if an avalanche of selling starts, it's going to get really ugly really quick. And we saw how ugly and how quick it happens in March of 2020. So I think Powell's speech is going to be kind of a non-event.
That's, well, especially if he just says keywords over and over again and doesn't actually say anything, but just blabbers.
I will be interested to see if he talks or says anything about inflation, because it's obvious. It was obvious to me several months ago that it's not going to be transitory, and I'd be interested to see if he changes his stance on this and to what extent. We'll see.
I'm glad you brought up inflation, because one of the things I've been noticing lately is there's a lot more mainstream media headlines that reference inflation. And it seems like that is a new maybe willingness to talk about what we're all seeing. I've also seen lots of social media posts about shrinkflation, which seems to be, sort of an indicator of inflation with, 3 less Oreos than we used to get or whatever. But and even Krispy Kreme, although they're giving away free donuts, is warning about inflation as well. So do you think that he can ignore inflation when other people are being more forthright about what they're seeing?
He's been doing that all along. I mean, we've had rampant price inflation for quite some time. I mean, in the CPI measurement does not, it's designed to not measure inflation. I mean, it's completely muted housing price inflation. A big part of the inflation that we've seen is in financial assets, the stock and bond prices. But there's been, the price of gasoline. That inflation is not rising prices. Inflation is when the money supply increases at a faster rate than wealth output. And the GDP, even though they say, oh, it was up 6%, year over year, that's for the second quarter, 6% annualized year over year. Well, so frickin' what? It was highly negative last year at this time. So, it's just, I mean, it's growing, but it's less negative than it was at the end of 2019. So, we don't really have bona fide economic growth. Any kind of growth that you're seeing is it's increasing prices. But inflation is what happens with the money supply relative to the wealth output. Rising prices is evidence of that fact. It's evidence of the fact that the money supply is growing at a much more rapid rate than your wealth output. And so what happens is you've got more and more dollars chasing the same amount of goods, or maybe a little bit more amount of goods in some cases, because of logistics problems and supply problems. You got more dollars chasing less goods, and that's what's driving what's being referred to as inflation. Is really, just it's rising prices as a result of dollar devaluation. And it doesn't matter if the Fed starts to taper, they're still devaluing the dollar. To the extent that they continue printing money, they're still devaluing the value of each dollar that they print. Doesn't matter if they're printing 120 billion a month or 105 billion a month or 90 billion a month. It still has a devaluative effect on the dollar, unless they can somehow get the economy to go bonkers, which they can't. I mean, there's excess capacity in the economy. Capacity, according to the official numbers, production capacity, there's only 76% of it being used. So you're not going to build new factories and manufacturing plants because you're not using what you already have out there that's been built already. So that's not going to add to economic growth. You got a massive reservoir of people who, for whatever reason, either aren't working or don't want to work, And you got to, until those people decide that they need to find work, you're not going to have a labor effect on potential wealth, an increase in wealth output. So we're going to have rising prices until the time, and I don't think we'll ever get there until the system resets or collapses. You're going to have rising prices until the Fed stops printing and starts removing the money that it has already printed and destroys that money. And it's not, and I say destroy it, you got to get rid of it. I mean, right now, if the quantitative tightening that we saw, I guess it started in 2017, ended in 2018 or something like that. I forget the exact dates. I mean, that was just the Fed reversing the QE. So it was pushing its treasury and mortgage paper. I don't think it was pushing mortgage papers. It's all done in treasuries, pushing treasuries out into the banking system and taking the cash in. And I don't know what it was doing with that cash. No one knows. I don't know that it was destroying it, but that's the only way that you're going to stop price inflation, is to stop the inflation of the monetary base.
Well, seems like they should call you to figure out what they need to do.
They know, these guys know. Well, I don't know if Powell knows, but most of these guys know, I would assume. I mean, they took the same quality and level of economics courses that I took in college and graduate school. So they know.
So another thing that's been coming up that popped in my head when you were talking is, so if they're making all this, all like the money and not taking it out of circulation, and that's why we're having inflation, how does that relate to the debt ceiling and the fact that, they're making all this extra money, but at the same time they're influencing the inflation level? Are they able to buy less as well? And does that impact the debt ceiling at all?
I mean, it's really two kind of separate issues, and we don't really have a debt ceiling.
Well, not if you can just add zeros, right?
You've got this theoretical cap on treasury issuance, and they move the goalposts whenever they need to, and they're going to move the goalposts again, and it's going to be, I don't know if it's going to be, I think the last time around they did that and Trump was in office. I think it just happened. I don't think there was a lot of political grandstanding and a lot of wheeling and dealing politically. I can't remember, but I don't remember that being the case. I think they just raised it. And what happens is you get the powerful congressmen on either side of the aisle, and that they withhold votes on whether or not to raise the debt ceiling until they can extract some political capital out of it. And I have a feeling we could see that this time around, but it's going to get lifted. It has to.
So
it doesn't have to, but you're going to shut down the country if it doesn't get lifted.
So there's no fiscal cliff. It's just like,
well, I think the fiscal cliff that's being referred to is, I think it's the end of September, maybe, when all states and the federal government, when the supplemental jobless benefits that were implemented after the lockdown period, I forget what they're called, some stupid name. I think those expire.
Okay.
And so people that are getting, a lot of, you read about, these people who aren't working because they're getting all these government benefits right now. And most of the benefits are connected to the added benefits that were added in at the state and federal level related to people losing their jobs because of the economic, or the lockdown.
Yeah.
So I think that fiscal cliff is referring to the theoretical expiration of all those programs collectively. So some states, several states, the state benefits have expired and they weren't extended. But there's still plenty of states that are handing out benefits, and the federal benefits are still in place. So, but it's just like the eviction and foreclosure moratorium. That was supposed to end at the end of July, and of course, right when it was supposed to end, Biden extended it, and I forget how far out he extended it. I can't remember, but it's it makes good political theater, and it makes good news headlines, and it gives people something to talk about. But if they decide they want to, defer these various deadlines, they're going to defer them, and I expect that they will.
All right. Well, I guess we'll get to find that out together as time continues to go on, and we can meet back up next week and giggle or shake our heads about whatever Powell says, depending. I probably both. But was there anything else that you think is pertinent to talk about right now, as far as things that would be, affecting any of the things we've already talked about? Like, are there any kind of missing pieces I didn't bring up that would be?
Well,
okay?
the one piece of the equation that I think your audience probably is curious about is, what the heck's going on with gold and silver? And I would suggest that a big part of the blatant manipulation that we've seen over the last 3 or 4 weeks, starting with what I guess it was 3 Sundays ago or something, when as soon as the Globex computer market opened up, they smashed gold and took it below 1,700 briefly. I think a lot of this is being done as in advance of what everyone already knows, and that is, they may try to taper, but ultimately they're going to find out that they can't. And so, the price movement that you've been observing is really price movement that's been dictated by the paper derivative market, the fraudulent, phony gold and silver markets. And I think part of it is the focus of it is for the banks to try and cover up their net short positions. I mean, that the banks have I think with tomorrow's Commitment of Traders report, we might find that the banks have actually gone net long paper silver. I don't know. They were almost net flat paper silver at the end of last week. So I think that's part of it. I think everything that's going on, geopolitically, the Afghanistan abortion, the developing economic and financial abortion in this country, I think all of that is extraordinarily bullish for gold and silver. And I think, I don't know when it's going to start, but I think sometime between now and Christmas, I think we're going to have a rip-roaring rally in the precious metal sector, including the mining stocks. So,
well, we can.
I'm still cautious for now. I want to get through the Labor Day weekend, and I've been holding a pretty high level of cash. I haven't put any of it to work this week, even though we've had we had 1 or 2 days where we had some promise in the mining stocks. But I think the time between now and when this last down leg started and when the next rally is going to start, the next leg higher, and I think it's going to be a big bull move higher. I think that the time between now and then is starting to shrink, and I think we could see something start to develop, probably mid to late September.
Perfect, just in time for us to break down at Silverfest in the end of October, right?
That's right.
Well, yeah, and we'll have another Arcadia Christmas or holiday silver party, so we'll be able to look back.
Did Chris pick a property yet?
He's going to one on Friday that we think is the winner. So I should have an update for you guys soon, but I've got the landing page ready to go. I just don't have the actual hotel chosen yet. So we've got our schedule, we've got our speakers, we've got nibbles, which is the most important thing. And so now all we need to do is pick a place for you to play tennis and for us to have a full Jeopardy. I guess, yeah, exactly. Thank you for that view. So I also wanted to remind people where they can find you in between now and then. So you are on Investment Research Dynamic with your awesome mining stock journal and your short sellers journal, which, by the way, Chris wanted me to get your opinion on the fact that I did Tesla puts last week. So he thought that would be a good thing to bring up.
He already knows my opinion on that.
I know. He just likes to poke you, Dave.
I know.
So
the
for
bear.
all of you who want to keep up to date and all of Dave's amazing research and get inside that awesome mind of his, you can sign up for the very affordable Mining Stock Journal and Short Sellers Journal, which I do know is going to raise prices sometime soon. So you can get grandfathered in at the current price if you sign up now. And is there anything else you'd like to add?
Yeah, in the next issue, which is next Thursday, be released next Thursday, and I'm taking a long Labor Day weekend off.
Oh, good.
One of the stocks that I followed for quite some time, and I know the CEO, and this particular stock, its market cap is under $10 million, and it's being completely ignored by investors. It has a small share float, and they had an interesting news announcement this week. I still need to talk to the CEO about that to see if what I'm thinking about what it means is that's what it means. But this is the type of stock that over the next 12 to 18 months, if we do have a rip-roaring bull market in the sector, this is the type of stock that, you know, the market cap can go from under 10 million to over 50 million very quickly.
Fantastic. And that's why I look forward to every other Thursday when the Mining Stock Journal pops into my inbox. So if you guys want to feel the same sense of anticipation that I do, sign up for the Mining Stock Journal at Investment Research Dynamic. And
man, I have some subscribers. I'll get an email like midday. They're like, was there a new issue today? I'm like, come on, you know, I don't send it out until after the stock market closes.
well, I like knowing when it's going to show up, and it's definitely one that I look for in my inbox. So you can find it.
Thank you.
Well, thank you, Dave. Like, you know, I don't have your background. I'm still, you know, I'm 3 years into silver and have learned so much from, you know, you, from all of our other friends, but really the analysis that you are able to bring is something in my mind, I can't pay it enough for that. So the fact that you do it and give it to us for, you know, what's really a pittance compared to what we, you know, the amount of knowledge that we can gain from it is just something I'm grateful for. So thank you.
I appreciate that. Thank you.
Well, thank you for joining me today. And I look forward to catching up with you again soon. And I hope that you have a fantastic weekend, and we will definitely get to do this again and look back and see how all of our predictions went.
Sounds good. Thanks, Yara.
Thank you, Dave, and thank you all for joining us. And don't forget to hit that like, share, and subscribe button and the notification bell. I'm gonna get it next time. Thank you for your help, Dave. Talk to you all later. Thanks so much. Bye.